ఇప్పుడే కూర్చున్నా వద్దు కాళ్ళు అప్పుడు వచ్చినాయి.
Everyone, how we doing? Hope everybody had a good day today. Welcome everybody. How we doing? Hope everybody had a good day. Trade floor was crazy quiet today. Wondering if class is gonna be real quiet as well. Oh yeah, doing good. At least a moderately fun day today. You guys know I don't love trend days or trade short often, so I don't I didn't do too much. I think I took 3 trades today. Oh no, I took 4 trades today. 3 long trades today is what I took, and then 1 short trade. How'd everybody else do? I see a few more people trickling in. Hope everybody's good. Hope we all had a fun day. Yeah, it was a wild one. I mean, it was what a sell today. Big selling. Big selling basically market wide too, nothing escaped the selling really. There's a few of those standout green names, but for the most part, it was a easy day to be bearish, stay bearish. Yeah, I was gonna say there was a few random names. I know PDD was one that went on a face rip. And people were short on it, unfortunately. AT&T, spectacular day on AT&T. This thing was flying all day. Uh, I mean, same with those. It was interesting. I was actually going to touch on this. Verizon also ripping. T-Mobile also putting in a nice rip today. And I'm not going to talk too much about this. We're going to touch on it in a little bit. You can always look at the sectors of spies. So I like to check communications because they actually hold Verizon, AT&T, and T-Mobile in there. And so it was crazy to me that the 3 largest holdings in this thing were 3 of the very few names green on the market today. And somehow it's putting in an almost -2% day. I mean, everything else in there must have just been getting clobbered. But he had some big standout names today. Even I never looked back on it, but I saw that this one was actually, yeah, pulled back some, but off the bat, SMCI was even on a ripper, like one chip name. That SMH, the chip sector was definitely the weakest place in the market today. I know a lot of people were hunting on those dip buys today, but I just could not pull the trigger on that. That was a lot of selling. For anybody who doesn't know, SMH, this is your semiconductor ETF. And you had this semiconductor ETF putting in a 7.5% move down. Buyers are either going to show up in force or we're going to visit this 200 day here pretty soon on it. What PDD end up doing? Nothing end up pulling back for you guys, or what happened here? Nah, just ripped for the whole day, huh? Yeah, this is the chart that I sent somebody. Technically speaking, the stop loss was a break at 95 on that thing, so I don't feel too bad for him. Welcome, everybody. How we doing? Hope everybody had a good day. Some fun to be had all over the market today, no doubt. Even a couple halfway decent bounces. But man, the $14 down day on tech just out of nowhere. This was one bounce I got. I did catch that little bounce there. I like that little 3 push wedge. But then the second we were back under here, it was time to be looking short on that thing. Okay, give me 1 second. Okay. Okay, welcome everybody. How we doing? Dirty River here. Thanks for showing up tonight. Tuesday night. I think it's Tuesday night market scan tonight. We're gonna be we missed the market scan on Sunday. So all right, I mean, I'm sure we could have planned for at least a little bit of downside, being at those highs yet again. But nobody should have expected anything like this. Today is one of those days that just builds massive FOMO for everybody. And they'll go looking for this same kind of move tomorrow and probably get burnt. Don't get me wrong, I won't complain if the market puts in another massive move, but short week, I was surprised at this move. I think most people were surprised at this move. I was asked many times, why is the selling so heavy? Really, the only news that I saw was that Japan is going to do another rate hike. And then really my best explanation for it, because it was like it was very controlled selling. I'm not trying to play this down at all, a $14 move or whatever intraday on QQQ. Pretty unheard of, obviously. But it was just controlled downward selling all day. Obviously good volume, but not exceptionally high volume, kind of just, really in line with a lot of this summertime volume that we've had, your 40, 50 million days. And so really the main explanation that I could give was just that it was some risk off into the end of the week. We have a short week going on. Summer is coming to a close. We're coming into September. People love to push the bearish rhetoric in September. Whether you buy into it not, no big deal. So I think maybe we just saw a massive risk off go on today. There, like I said, I was discussing it a little bit before we started. There was very few things green in the market today. As far as SPY, I always like to look at the end of the day and see what each of the sectors did, just to kind of have an idea of, was there anything that was performing? And really, I think there was only two sectors. I think it was consumer staples and real estate were the only ones putting up, slightly green days. But for the most part, this was market-wide selling. One of the things that we've, me and Tilio have been pushing on everybody the last few months is watching RSP. So it's the equal weight S&P, for anybody who doesn't know, SPY holds shares. That's why it moves when other things move, because it is, moving based on the value of the shares that they hold. And so that's why SPY moves the way it does, why you can have, a bunch of red names, but if two of the big tech names are green, SPY can be ripping, that's why SPY can work like that. Well, RSP is they just took all 500, 505 companies, whatever it is in the S&P, and they just treat them all equally weighted as if they own them all equally. And so it does a much better job at telling you how is the overall market doing. SPY is basically QQQ with another name these days. I mean, 40% of it or whatever is big tech names, 30% of it is big tech names. And it's what really moves the S&P these days. Don't get me wrong, you can have some days where energy or financials are leading, but as far as SPY, it's basically big tech. RSP shows us everything, and even RSP had the selling today. Some that I'd been pointing out the last couple of days as well. SPY was kind of struggling here and there. RSP was continually setting new all-time highs. Well, today, finally, we had that whole market pull back. A lot of things pulling back to, big important areas, places to look for bounces, things like that. Some major SMAs, we'll get into that soon. But I wanted to point out RSP. And, it is the only one, SPY and QQQ, obviously QQQ, of course not. But SPY and QQQ still haven't retraced this entire move from that August sell-off, kind of that panic for those last couple of weeks, last week, August, whatever it was. But RSP has, and RSP was setting new all-time highs, which shows us that, the tech trade people aren't piling into. Obviously, I'm not piling into it. I think it's a little too early to be thinking about, at least longer term dip buys on it. I would like to, I never want to be the first person in the trade. And as we saw today, the first people trying to get long on tech on the pullbacks got obliterated. And so I'm not trying to be there. However, I am looking for dips to buy in some of these other names, some of your consumer staples, your communication things, even some healthcare, but your Coca-Colas, your Pepsis, those kinds of things, obviously AT&T. And what RSP did was it broke out, set some new all-time highs. Obviously pushed up to a resistance that we were looking for and ultimately failed below it. But the pullback, and obviously not to the cent, it pushed past it by 50 cents or whatever it was, 40 cents, whatever it was. The pullback today brought us right to those previous all-time highs. And so I think this will be a very good indicator for the next couple of days going forward, seeing are we going to bounce it or are we going to hold it? Because or are we going to break it? And I'm looking for this because we will know if RSP breaks down, then the market could likely be looking at a bit more breakdown, at least in my opinion. If it gets back below these previous all-time highs, that's where we know people are gradually starting to go risk off. They're going to decrease the breadth in the market, whereas we always talk about expansion of it. They're going to be saying, okay, maybe we jumped the gun on these a little bit. Maybe it ran. Maybe we shouldn't have been diving into just everything in the market. Obviously not tech, but everything else. So I think have your eyes on RSP tomorrow. Really watch that 173 basically area, see, and 172.50, 173 area, and see if we're going to get a breakdown below there. And if we do, that's when you can start to look to short some of those other names, some of the energy names. Obviously energy was super weak today. Financials, weekday, not an insanely weak day, but if we start to see this breakdown, that's some of the places we can look to short things. And, even some of those communications, like I was discussing earlier, AT&T, and we're going to talk a trade plan on this soon. But AT&T, obviously great big name or great name, big move, high volume breakout, everything you want to see for a bullish move. However, if the market has other plans, then it might be a place you want to look into shorting. Verizon, kind of the same deal. And so that's what I'm looking for on RSP. But let's talk a little bit more SPY, and actually some things we can trade about it. That was, I wanted to just get my feelings out on the market, and see what we can look for. Trade the actual charts, ignore the bears in trade floor, ignore the people saying, oh, September is always red. September is red about 50% of the time. It does on average end, slightly down. The market's slightly down. Everybody looks for these huge things, but I saw the real average. I think it's down, I don't know, 0.3% or something on average, the whole market, and that's over the last 100 years. So, market is still overall very, very bullish. I think we have some big stuff, we have big job data coming up the end of this week that I think could, kind of set the trend for us either up or down. We'll see. But I want to watch SPY and I want to trade SPY and SPY, after the move today. We had 11 days or whatever, 10 days, 2 weeks of sideways. So we finally got that breakdown. This goes back to the thing that I always try to teach you guys. Everybody complains about range days or ranged movement. You can't have big old ripping days like this without doing this before. Same as this. You can't have this kind of a rip without doing this before. So we like to see that as traders. We love to see these breakdowns. We love to see, breakouts, breakdowns, doesn't matter to us, but we love to see consolidation working because it means suddenly the market has like some interest and people want to be trading it. When those breakdowns come, when those breakouts come, we know that the market participants, the one that actually matter, not the retail traders, want to put some trades on. And so that's what we want to look for. And so with SPY, we're just going to chart it and kind of chart it how I would be looking right now. Going to end up being very, very similar levels to what I will be trading going into tomorrow. Obviously, I'll just use my charts that I have been using for the last month or so. But first thing that I like to do anytime we've had any of these parabolic moves, and we had one down and up, is pull some fibs and see how we're doing on the retracement. See if we're trading anywhere around them. I know that a lot of people don't love using fibs, but and I always say if you can chart support and resistance well, you'll almost always find places that your fibs line up with those levels. And then when we're on these daily timeframes, at least in my opinion, you always, always, always want to take note of the major SMAs. And so we can see right here, we we were looking at a nice cross of the 20 SMA getting back over that 50 SMA, met with big selling today. We'll see how this SMA adjusts going into tomorrow, and see where they end up landing. But I think, anybody can pretty well see on this chart that this, at least in my opinion, needs to be your line in the sand tomorrow. Maybe we got below it. Maybe we never even go back and touch it and run all day. But I think if you aren't paying attention to basically this 548.80 area, you're missing a very, very important piece on the chart. So be careful chasing shorts down to here. If we break below it, obviously, that's the next thing that I want to take note of is look at this gap. This is the open gap that we have on the chart right now. It lines up really nice, a little bit above that 61.8% fib. So if we are able to break below here, let's look for that gap fill, same as we did. I mentioned it on QQQ today, ultimately filled it plus much more. But then beyond that, we always want to look left on the chart. I always teach people, if you want to know what the chart is going to do to the right, look to the left. And so we can see here that obviously this area has mattered before, and I want to take note of any little movement like this. Obviously, this is our level from over here, the top of the gap, and those SMAs now, and it just so happens to line up with a previous resistance or support, depending on which side we've been on it. Next one I want to look for is anywhere you get these consolidations, nice bottoms, anywhere you take big bounces off. You always want to take note of those on the chart, and then really over to down here, we're going to do the same thing. Very similar top over here that resulted in a nice breakout, and then ultimately pushed up to these next levels where they got set. And then I want to take note of all three of these just as kind of a midpoint. This was the gap, and then we ended up holding the gap after attempting filling it and never filling it. Obviously well filled now, but that's really all I want to look for on downside levels. I like to know, where are my major levels? Where do I want to trade around them? And to me, this is where I would, when I'm trading throughout the day, scalping, all of that, everybody knows I find most of my stuff on the daily time frame. So I like to use these to build my bias. Well, we also need to look on the upside. So the major places I'm going to look are going to be anywhere we have taken these big rejections down. Obviously right here, going to be another big rejection down. You want to take note of that. And then these highs up here, who knows what'll happen, but I doubt SPY is going to go up $10 tomorrow for those to come into play, but we'll see. And then obviously last one that we want is really right here, kind of the bottom of this old gap, which is obviously now well filled. So now we have levels to trade around, and now we are able to build, I don't want to say biases, but places where we have interest in trading. It kind of looks like we have a lot of levels here, but if you take it into account, there's about 10 levels in a $24 range on SPY. So when we zoom into these shorter time frames, they're really just reasonable targets to trade around. Some of them will get too big. If you're short in 560, 70, that there's some areas that we're going to hold up on the way to 557 unless we have a waterfall like today. But these are the levels we want to trade around. And so obviously, as I stated, how will I build my bias tomorrow? I will see where we open in relation to this SMA cross and the top of this gap. I am from 548.80 up to about this 550 area. If we break below it, I'm a dip buyer. I'm even a dip buyer at 550 if we're coming back and retesting it with stops under this 548. This is one of those rare times. I always tell people, don't be in calls, close your calls, one candle later buy puts, stop out of your puts. Don't do that unless you find yourself at these very, very, important, crucial levels on the market. So we're going to have all of these SMAs trading right around the top of that gap. And if we're able to get below here and get some sort of a retest on the top of the gap, that's going to offer you a very, very reasonable short entry. And we'll use basically that 550 as the stop instead. So this is an inflection point in the market. A decision will be made right here. It might have already been made today with the bounce, going into close. We'll see. But that is where I will be trading around tomorrow. And then I want to point out, this gap likely fills if we start going through it, but you always have to look left. And you would be relatively insane to not pay some attention to these 4 wicks over here, where we tried to break it, ultimately sold really heavy. So if you do short the top of this gap, you really need to watch the 547 area as well. So that's what I'll be watching on SPY. Pretty cut and dry. You know, if we're able to hold 550, I basically look for the push back to it. 553 using some intraday support and resistance, or any of these previous candle closes, any of that. But looking for that pushback to 553. If we break below 548, 549, 548.80 area, then I'll ultimately be looking for that gap to fill. With the moves the market has been making lately, every day is doing $5 or more, then I imagine the gap fills, and I imagine the push to 553 fills. So that's how I'll be looking at SPY tomorrow. Definitely not rushing into short unless we find ourselves below that level into the open. But looking at the charts, looking at the close, we've pushed down to our major areas. We almost got to the top of that wick. This is a day where if you want to put on big risk, you swing a SPY call, and your stop is in that gap. And your risk is going to be high, but you look for that push down to the top of this gap, and then you swing a SPY call on it, a couple of days time. And that's likely what I would be looking for personally. And so that's how I'll be trading SPY tomorrow. Again, just line in the sand, if you want to see it on the short time frame. There's our gap. As long as we're above this gap, I'm looking to buy some dips on any of these levels, and then just using these levels as the upside target. How I treat daily levels is if we bounce one, I target the next one, and I'm not buying calls at the next one until we're above it and we're retracing to it and I catch a bounce. That's how I trade all these daily levels. So let's see, any questions? Yeah, SPX puts early morning, those definitely worked. PDD not working. Oh, Norberto, QQQ, NVIDIA getting rock out. It's getting rush. A nice flip swing, a SPY call. That's a good one. I mean, yeah, I get it. Yeah, like I just said, I'd probably be swinging a SPY call too. I didn't. I had a decent day. But I didn't. What was the 557.70? Well, I don't have the 557.70. Was that on like one of my charts in my tab today? As I said, these might be like slightly different. No, let's see that one. Okay, so that's SPY. A paper and some 557 bucks. Yeah. I think everybody experienced a nice paper hand today. Okay, and so here we go. QQQ. Let's do the same thing. We'll just start a new screen. Obviously, this one will go a little bit faster. Same thing you want to do on QQQ. Obviously, taking into note that it is still the weaker of the major ETFs. There's no denying that it is the weaker of the major ETFs right now. Its SMA is still crossed under in a bearish setup. They were pushing up, not going to be pushing up for long. That'll be corrected soon. And getting trickier and trickier to look at this thing long, because you get this nice push up. Technically, this is a technical breakdown. This is to be shorted and treated as a downtrend all the way down. I know that this is like kind of bear flaggy or bull flaggy, whatever you want to call it, but this is why I don't trade flags. I trade the trends. So we're trending down, and ultimately get this nice big breakdown. Of course, as I said, nobody should have been expecting that, but now we've really done some selling. We retraced over 75% of the downside move. Now we're retracing, and we've retraced a good chunk of the upside move. So I want to do the exact same things. I always want to look left on the chart. I want to look for any sort of major highs and lows, anywhere that resulted in big breakouts, any nice bounce points, levels held, things like that, and just see where we're trading in relation to those. And QQQ obviously been on a rip for most of the year, but finding itself in a place that is more difficult for me to want to be long. I'm not against the tech trade. Obviously, I do think we bounced that 460, which is exactly where I would have, if I was a bull, this is where I would have hoped we showed up for a bounce. However, I'm still in the camp on QQQ. If you do catch a nice bounce, or you catch a nice move up, and SPY as well, you need to be selling into that strength. I'm not saying short all bounces, but I'm saying if you're long and you're catching the move up, keep those stops tight. Especially in tech, as we've seen, still sitting well below those highs. I mean, I don't know, other things down almost. I mean, it's just teetering on correction level. Obviously, was deep into correction level here, probably pushing, not quite there, but three-quarters of the way to a little bear market push down on it. But we're still sitting right around 10% off those all-time highs, and so I am still cautious getting long on tech. I do think we're going to talk a couple of tech names that maybe are providing a bounce, but most of these tech names are just trading in really nice places where bounces might come, and then when the bounces don't come, then you're able to short them. So for me, tech's still feeling a little bit apprehensive, and this 460 obviously going to be my line in the sand. I like to keep it nice and simple, and then really the only other one, I wish I would put this one on here. Really, that's what I'm going to be looking for. If we're able to break and hold below the 460, below the 460.25, bears are still around, selling pressure is high, like it was today. I'll ultimately won't be looking for much of a bounce until 455, 80-ish, 456 area. So a nice little move down. As you guys know, I don't trade short often, so it's not like I'll really be catching that. But if we break below that 460, I'll be looking for ultimately going to the 455. On the other side of it, if we're able to push back up, find some buyers in the next couple of days, I'll still keep my targets realistic. Nothing above this 20 SMA. With the moves the market's been making, maybe we just fly past it if we do start bouncing. But really, this 460 down to about 455, back up to the 466 area, I would love to see us stay in that nice little $10 range for the next couple of days. We'll see what happens. But, if we're pushing up, I'm going to be more and more careful long. If we're pushing down, more and more careful short. Just keep it nice and simple for me. Let's see if we got any questions there. Oh, we got Norvin just sending screenshots. This guy's insane. Oh, Agent J, nice eye on that. I'm assuming you're talking about SPY. Because this is what I originally had on my chart in the morning, and I was like, they wouldn't like make it that easy on us, And this bounce right here was like, wow, they really did just make it that easy to catch a $3 dump. I didn't catch it, obviously, but nice one there. Let's see, we got Norman. Can we check Google? Yep, in just a minute. We're gonna go over a couple trades that I'm checking out. I just want to talk SPY and QQQ a little bit more. I know these days get people feeling crazy, so I'd like to, cull that if I can. We got more screenshots from Norvin. He was riding the wave. Shannon, good question. So it depends what you're trying to do. It depends if you're trying to swing. If you're trying to swing, I'm not caught dead swinging away from these daily levels. If we aren't trading at these daily levels, holding this daily level, it's kind of like I said on SPY, if we sold down to here and I was looking for a swing, I would have been looking for SPY calls anywhere around here. The reclaim of 550, then I feel comfortable enough to swing it. And it did come end of day, which a lot of the time this end of day volatility, like in the big picture, means nothing. There's a lot of checking out at 3 o'clock Eastern in the market. And so these end of day movements, while they come on big volatility and big volume, it's a lot of market on close orders, and it's a lot of just algos trying to get delta flat going into the close. And so they want to reduce their risk into close always. And so always take the end of day, volatility with a grain of salt. But we push down to the top of this gap. We reclaim and hold 550. I did scalp SPY calls here. I shouldn't. I would have swung one normally, but that would be like a daily close swing setup. However, these levels, if you're trading them intraday, let's say today, and you miss the first short opportunity, we break our next level. Here's where we're looking to short. We're just looking for some sort of double top, some sort of rejections here. We just want to be short. Maybe it's a 15-minute candle, maybe a 5-minute candle. Maybe this bounces up, we go sideways, and you say, hey, I'm taking the risk on the double top here. So it takes about 40 minutes for that trade to finally set up for you. And then you catch more movement down, and then same deal here, selling volume high. We're finally giving up lows. You want to short the first bounce with stops over this, and this was just 5-10 minutes was all that one took to get working again. So it's really up to the trade that you're looking for. But if I'm swing trading either because we have, broken above a level, held it and closed close to it, broken below a level, so I'm swinging short, or held a, sell all day, hold a big level. That's a place where I love to swing long, even if you're looking for nothing else than a volatile, little retrace to the upside, some sort of relief bounce just for a quick move in the morning. That's a setup I love on a swing. Okay, and so I see Norvin. Tesla XLE, yeah, well, we can talk those. First one that I got my eyes on, Amazon. This is one that red day, obviously, tech. Hard pressed to find some tech names that weren't red today. Main thing I'm taking note of right here, though, is yes, we broke out. Then we technically failed the breakout, but we closed above the trend by the end of the day. So to me, this is something that, I was, pretty bullish on Amazon down there about 170 last week. I'm definitely bullish on it on that reclaim of 173 going into Friday. Was definitely bullish on Amazon. Again, feeling a little bit bullish on Amazon. Of all the tech names out there, this was one that, to me, the setup looks like it's there. It's kind of worth putting the risk on the trade. It's one that if I had been paying a little bit better attention, I would have, probably taken that swing entry today and then want that level there. But we have an issue here. And the reason that I'm not, I wasn't rushing into it today is that we're going to have jobs data this Friday, which in a roundabout way definitely is consumer data. And Amazon has kind of stated that the consumers are struggling and the consumers are spending a little bit less. We've even seen it in some of the consumer discretionary stocks, but Amazon is one that they hinted at maybe the consumer is having some trouble. But what I'm looking at here is a sell down to that 200-day, 20 even crossed below the 200-day on the giant gap down. And then we're able to reclaim it. We got SMAs crossing back overhead. We're closing above a trend. I know that, best case scenario, if I get stopped out of this trade and I'm buying on a retest, my stop is likely going to be under 175 is all. So I wouldn't have a lot of risk on this trade. And that would be my daily close back under the trend, back under 175, 174.50. So not a ton of risk there if we can get a retrace to this trend. And then if there's heavy selling, going crazy, you can always take the stop around this 174, 173.75 intraday and maybe look to reposition at the 200-day if it comes. But for me, Amazon, I'm a dip buyer down to about that 175. Does it hold? Maybe. It of course still had an ugly day, it's down about 1.2%. So definitely still had an ugly day, but it's one that I was, feeling bullish on this sell-off down, and we're getting a nice little pop here out of it. Obviously, a lot of things had a strong Friday, met by a very weak Tuesday. So we'll see what happens, but I like Amazon here. I should put the 175 on there for you as well, just because the risk is low. And I know that I said I wasn't rushing into tech trades, but I know everybody loves to trade tech. Amazon's one, if you're looking for an upside trade, you can, with time, you can really be a dip buyer. If we get down to that 175, you can really hold that dip for a couple of bucks against you down to the 200-day and use that as your stop. This should be strong. It typically is, statistically speaking. So even if you're in it long and hold it all the way down to here, it's likely going to be nice. And then for upside targets, if you get that 175, obviously 176 and then 178.50, nice $3 push, $3.50 push for you. If we're able to really get to buying, your ultimate target's going to be up here at this 50 SMA, but you want to keep it realistic. Say, yes, we have met our 80% statistic that most breakouts fail. We're now breaking out. We're now retesting. We're above the 200-day. We're above the 20 SMA. So we have some reasons to be looking, enough reasons to be looking long here, but nothing telling us we're flying back to all-time high or anything like that. We're just looking for a nice little bounce up to maybe some of these previous highs. Of course, if we're getting daily closes above them, you can keep on swinging to see what you get, but looking for a nice little bounce on Amazon here. Next one, Apple. I'm liking Apple. it has another interesting setup. I'm just going to leave my same levels on here. They're what I'll be trading around personally. So today was a wild one. We finally had that 20 crossing back over the 50 for, the first time in what, a month and a half, something like that, since middle August, beginning of August. So had that crossing above the 50, sold down exactly to where we would really hope we would bounce. This is another one, 220 right here. Obviously big, strong psychological level. It, of course, always want to take the big picture into account. It is Apple. It's sitting up here at highs. If you're buying into any sort of strength, sell into that strength and protect your money. I'm not looking for Apple over the next month to push back to all-time highs, but I am viewing Apple down here at this 220 as a very, very tradable zone. And it's where I want to look for it to bounce. However, on downside, if it starts giving it up, we don't have a ton of data around here. And so ultimately, if we give up that 220, I won't personally be entirely surprised to see us come all the way down, this 214, 215 area. Obviously, a few little hiccups in the way. Should probably even take note of these lows, but I like that low the most. But if we're able to give up 220, nice little short for us as well. Apple's one that I do like to trade short on just because it's typically doesn't have, $7.80 ranges on the day. But 220 going to be that line in the sand for me. Obviously, if you get in here at 220, you're going to want to be looking to really, really trim off that position if we get back up to this SMA. If you are staying long, you are definitely going to want, and you've bought the 220 dip, you want to see closes above these SMAs. Otherwise, you're definitely playing with fire. So be real careful there. But the 220, that's my line in the sand. You can, of course, short it below these SMAs down to 220, but they are so often met with volatile movement off of them. Whether it's a sell down and a buy up or a buy up into it and a short off of it, that I don't like to take the break of it in the same direction as it until we've had that retest and some confirmation. That's just me, especially when we have them, crossing in the bullish way. That's something I'd be looking for. Next one I got, and again, we're just going to do these quick. I want to try to spend about 15 minutes on some of you all's trades. AT&T, obviously. Let's see, where's our, I wonder which one it is. Huh. Well, I guess we're just going to run with this one that I use every day. So AT&T, obviously been beating the drum on this one for the better part of 3 months now. Finally put up some good earnings, was finally able to break above this trend, had some consolidation, able to break above the next trend, able to break the 50 SMA on the weekly, 20 SMA, 200 SMA on the weekly. Going into the daily, again, holding the 200, breaking back above the 20, breaking back above the 50, breaking out and retesting. And then obviously for the last couple of months, I've been saying, buy any dip they offer you down to 1850, 19. We got many, many, many of them. And so after consolidating since basically the beginning, middle of June, I guess end of June, finally got that big breakout. I'm not exactly sure. I personally don't think this breakout is going to hold. It somehow took this really big breakout. They did get some news on a new fiber network. However, they also have 17,000 employees on strike right now. So I think AT&T is a kind of an interesting place to trade because very strong breakout, very technical breakout, increasing volume on it. So it's presenting, as you guys, all of my trades, I basically like a line in the same trade. I want one level that I want to trade around. And the level that I'm trading around going into tomorrow is going to be this 2040. If we are dipping down into 2040 into the open, then I'll look to try to play calls off of it with a very, very tight stop. If we are opening below it and bouncing up to 2040, I'll be looking to play puts on it. And it's at an interesting place because I would, if I'm buying calls, you guys know I typically trade in the money on these. When we're within 10 cents of it, I'll typically go for the next strike out. I'll go for those 20.5s, maybe next week's, not weeklies or anything like that. And then on the short side, I'll actually go 20.5s also because I want that in the money if I'm getting the push downside. And if I'm looking for the push upside and I only got, 7 to 10 cents to go, then I like to take it. When I'm, if I was buying the 20 puts, I'm 40 cents out of the money. That's too far for me. I would rather be in the money up here, that far out of the money from the next strike. So 2040, really nice line in the sand. And then obviously, if we're breaking below 2040, you can short it to the 2028. And then if we break the 2028, I imagine we will get a 20 retest in the coming weeks. I don't know when, but I would be very, very surprised, even with this amount of consolidation, for us to just absolutely blast basically 2% past 20 without coming back and giving it a try again. So if we do give up that 2028, I'd look for it to pull back to the 20. But very tradable thing, very cheap contracts. Got a couple, I hit it long today and short today. So nice little move on it. We'll see what it wants to offer us tomorrow. Final one from me is Walmart. Let's just create a drawing set so you guys don't have to see the other one. So Walmart, uncharted territory, obviously big, strong movement. Very, very cut and dry trade for me right now. I basically don't have a lot of interest being short on it. It's obviously so strong. Was it down today? Sure, 6 cents, 0.08%. So held up pretty good in the overall market. I want to see if that can kind of stick around going into tomorrow. And then, as I said, we have very little data up here. So I really have just a couple of levels that I care about. And for me, I think on my other chart, it's 77.30 is what I got, but 77.20, 77.30 area. Above there, I don't hate it looking for those pushes to highs, but you just don't have a ton of reward. What I am much more interested in is a dip back to this 76.50 level to buy that dip. And why that level? Because of this breakout. It held this level, wasn't able to get over this level, consolidated for a few days, and then really took a rip above it. So since we have so little data, that's what I care about. That's where I want to look to get long. 76.50 stops below it, super tight. And then again, I'll likely try again down here at the 76 to 75.50 area, just because this name has strength behind it. So that 76.50 retest is my ideal. But if we can stay above the 77.20, I don't mind it for a nice little intraday scalp up. I'm liking Walmart, cheaper contracts, $70 now, so it's cheap enough to trade. I've been enjoying trading Walmart since the split for sure. So that is going to do it for me. And unless there's any questions, of course, and then let's get into some of the charts you guys have been asking. Google we're gonna do first because I've seen that one's been asked a couple times, so we'll just pull that up. We'll create ourselves a new drawing set. Wow. Well, today was the day to get in there, I guess, but let's see. We got Tesla XLE, Norberto asking for all kinds of things. AJG, you'll have to ask me that one again. Al Brooks, BLTR. Okay, so first one, we're gonna do Google, and then we'll get into some of these other ones. So obviously, first thing that you want to notice on Google, who's asking this one? Good eye, whoever this is. Gary Kennedy. Love it. Nice for you. Cat, I've been trading cat since before you were born, Norberto. Okay, so obviously we have a very, very obvious place that we want to be trading around. 155 up to about this 156. This little zone right here. This is, we got dividend coming up here in 6 days too. This little zone right here, obviously if we go back, you could even slap another one down here. This little zone right here is all that any Google bull has to care about right now. We'll see if today ended up being the actual, really nice dip entry on it. Is it going to set a double bottom and fly? It obviously tried to. Or is it going to give up this 200 day? I am undoubtedly a dip buyer right here. Even though I don't love the tech trade, this is one that, like I said, the entry could have been today. But this is one that I'd be looking to buy the dip all the way down here to about 154, $3 below you. Obviously not buying every red candle or anything like that, but we got enough support. We got some consolidation. We have a potential double bottom down here at 155. That's really 155 is probably my ideal entry. And you have this 200-day right here. As we can see, things tend to take, we'll zoom out a little more, when you come into 200-day territory, you tend to make a pretty substantial move. If when you break below it, you typically try to get back over it right away, unless something's really broken in the market, which obviously in 2022 we were selling heavy. So when you break below it and hold, you can see some massive selling. Then it's going to behave as big resistance. Obviously, this thing pushed up huge 25% just to get clobbered right back down, break and hold, and we get to flying. So the 200-day is, rarely a trade that we get because you just don't hit them that often. So everybody should have their eyes on this trade. I actually love this trade. It's definitely getting an alert added, and it's a super simple one. I mean, I won't short it because I feel like one second. I don't feel like, I don't feel like, you're chasing the short at this point. So I don't feel like I would have much interest in shorting it. Obviously, if we give up all of this stuff, we get a retest that 200-day, it would be worth the stab. But to me, this one is just in beautiful dip by territory. You obviously aren't going to be looking for a gigantic move up, but a pushback to about 160 would really be the main thing that I was personally looking for. If you get that dip down to 155, stop under basically 153.90. So you're risking $1.10 for $6 up. Great risk reward. I mean, obviously, you want, of course, be trimming on the way. Don't do those insane $4 and $6 and $12 profit targets I hear all the time. But beautiful territory for a dip buy. Who is this again? Gary Kennedy. Putting it in my notes. I always try to take notes on these because I trade these things, Okay, Kat, Norberto, what do you got? I mean, this is an A+ setup to you, not me. I mean, this is just massive consolidation and you're right in the middle of it. I mean, sure, you got those SMAs. You can try the dip buy off of it, stops under about 335, but not for me. There's no A+ setup here. I mean, pretty massive technical breakdown too while we're at it. No A+ setup there for me, Norberto, sorry. AJG. Oh, this is, well, you've obviously asked me about this before, and I wonder what I told you last time. But we oh, this is just off this candle. This is a fib extension off of this insane earnings candle. Looks like these levels played pretty dang well, huh? And now here we are. I mean, we are overextended at this point. I mean, if you put in that 132 fib here, you'd probably land about that 130 or 300 area. But I mean, obviously 300 is the next target. I'm assuming this was you who asked me about this. PLTR, big company. Let's see. Really in that flying zone, huh? I mean, as much as I hate it, like you basically just have to try to be long and buy those dips off 30, stops under that 29.39, I guess. I mean, chart's not looking, I mean, chart's not looking super horrible, I can't lie. Weird like trend breaks all the time though. But really, I mean, try to stay long above that 30, see if you can catch one of those nice BLTR moves, pushing back to those highs. Unmute. What do you want to unmute for? Costco. Yeah, God, this thing is just insanity. Do you actually trade this? What is, I gotta believe those contracts are tough to trade. Wow, what a short it offered today, huh? Oh, and right down to where you want it to bounce. I mean, there you go. Nice cost. Into tomorrow, if you trade this expensive thing, 874, 875. Hate to say stops under 870. That's wide. 871, huh? There you go. That's your little zone to be thinking about entering in. Run it back to those 880s. This thing is wild though, yeah. Oh, you wanted to ask a question. What about the MU calls? Yeah, hard pass on MU. My buddy is, yeah, let's talk MU. I wonder if my buddy's in here. He was DMing me about this. And so to me, I mean, this chart looks horrible. Classic magician. I mean, longing it on like the worst possible day. But so big technical breakdown, obviously below all of these major SMAs. Not where you want to be looking to get long. And then so you got to go back here and look at some of these levels, you know? And so one of the first ones that I was noticing was this little gap fill right here. And this little gap fill right down here. And so, you know, we got this thing getting smoked. We got it closing below 90. We have these major lows basically over here. And then obviously gap fill, you know, we're technically closing inside of it starting. But this is a weak one, you know, so definitely not where I, as I, you know, stated, would have personally been getting long today. Definitely not where I would have been swinging long today. It's of course worth noting that, you know, 8% down day. Sometimes you can expect a relief bounce, but also sometimes you're really just catching a falling knife. But so we got these two gaps right here. You know, they're the places they need to bounce. I don't have interest in shorting it, you know, not a lot of meat left on the bones, but I would want to see it at least push down to this low to set a double bottom to try to get long. Because as it stands right now, I mean, this is just like, this is downtrending in every way possible. However, you give me a couple days sell down to, you know, fill a gap, come to a major level, come to the top of another gap and set a double bottom. I don't hate the micron long down there because your risk is much lower. This one, I mean, you long it at 94 or whatever. You should have stopped on the loss of 92.70. You should have stopped on the loss of 92. You should have stopped on the loss of 90. Not where I want to be. Not where I want to be. Oh my God. We got two Norvins in here. I can't even handle it. Let's see. Netflix. I don't look at that one in a while. Hmm. Well, uh, tricky one. I gotta clean it up and see what we got going on. Tricky one. Could not get that close over the previous all-time high. I mean, set new highs, obviously, but could not get the close over it. This would have been your next little area of interest. But then giving up that range. I mean, depends what you're trying to do on Netflix. It's such a, you know, it's such a volatile mover. So expensive these days. I mean, holds below about this 680. Man, but I do love a three push wedge, and you basically had one play out here perfectly with the close on it. I mean, you can short the 678, 680 with a tight stop, or you can short this trend break on some nice seller volume, obviously. Looking for about the 20, you know, you got a nice little $6-7 down to there with a relatively tight risk, $2 up or whatever. Can try the dip buy at 665. It's obviously worked, obviously was a big breakout level. But you're going to be kind of fighting a pretty technical breakdown at that point if you're buying the dip buy here. So that's one that you would really want to ratchet that stop up real tight. Uh, oh yeah, we got Tesla XLE, and then yeah, we're gonna risk the unmute. Why not? So Tesla, obviously, still looks horrible. We talked to last week when everybody's trying to be bullish at 220. We are still, and just for anybody who doesn't know, so Tesla on the weekly chart, basically the only like important, you know, supposedly important stock that is still just clobbered from the 2022 sell-off. I mean, this thing is down. I don't know how much, but a lot of percents. Let's see, to a close today, 50% ish from all-time highs. Not the place to, you know, be looking to trade it. What I've said is dip buys to 200. it also is lining up to be the 200 day these days. So dip buys to 200 is really the only place that interests me. And don't try to catch this breakout. Everybody has been trying to catch this breakout for so long. And yeah, I think Shark actually caught this one, of course, classic Shark, but it resulted in a big old failure. The company is not flourishing like you are led to believe. And so be careful along in this thing. Obviously, we tried the breakout, failed the breakout, but closed at an interesting enough point to maybe have some interest in it tomorrow. See if we can sell this 200 day 203 and look to play some calls off 200, 203 area. XLE was the next one. I knew I missed it. So XLE, basically no interest in trading it here. We can, well, that one all broke down. So this was ours. I think we talked this one last week. So this was our chart from last week. And you can do dip buys at this 200 day, but the thing just consolidates and consolidates. And, it's one that I think even when we were talking it last week, I was saying, everybody's looking for the breakout now, but some people are short. And because of how this thing moves, those shorts will likely be saved. The shorts were saved, just like the longs have been saved. People love to trade oil names because they're so volatile that even if you take a terrible entry or, long a top, you're frequently going to get saved. And so, just be really careful trading these names. Everybody's probably seen my little banner that says, the market's not manipulated, you took a shitty trade. I stand by that, but if you twisted my arm and said, tell me a market that's manipulated, I would absolutely tell you that it is oil. And so, just be careful trading these names. They're so heavily affected by geopoliticals. They're affected by everything. Not to mention, the US just has such little control over the price of it that they're a weird one to trade. If you're going to trade it, long the range lows, short the range highs. It works over and over, and just have no interest in the middle, like I got no interest 89 to 91. I got interest short at 92 and I got interest long at 87, 88. In the middle, I don't care what it does. Okay, here we go. We're risking it. Unmute. Or I asked to unmute. We'll see if it works.
Hello.
Hello, how we doing?
Hey, what's up,
Hold on,
brother?
I'm sorry, I gotta pull up one more Norvin stock. I
You good?
apologize. Norvin, don't short things that are down 7% on the day at support. Okay, there we go. You're unmuted. You're good to go. I think. Are you there? Do I have to ask again?
I didn't realize if I muted myself so you could continue talking, it would make me need to request you.
I recognize your voice. Who is this?
Ignorant trader.
Nice. Okay, nice. How you
Do you have PTSD from like unmuting the wrong person?
doing? No, but well, I mean, not like PTSD
I
because
mean, I'm
I've
obviously
done
not.
it. I've done it in the past, and some people said some like horrible things that made me laugh, and so I gotta be careful. You know what I laugh at. Yeah.
Okay. Yeah, got
Plus,
you.
you don't want to risk unmuting somebody like Norvin.
Oh, okay.
Mhm.
Yeah, no, I actually do just have questions. I'm not here to troll, try to get
Nice. Yeah, what's up? What do you got?
speed run how fast I can get kicked out of oop. No, so okay, I just wanted to walk you real quick through like on any stock, it doesn't really matter, preferably like SPY.
Uh-huh.
Like my current charting process, and it's been working for me recently, but I
Yeah.
wanted to see if there's anything you would suggest I add to it before, or not before anything, you know what I mean? Like just add to it to make it
Yeah.
better. So right, usually I start on the daily, right? Like exactly where you are.
Yeah.
And then I would do the fib retracement levels from the swing low to the swing high. So like that red candle at 419.
This one.
No, like
This.
a bit farther back than that.
Oh, the massive. Okay. Yeah,
Yeah.
like way back here. 409. That
Oh no,
one.
no, 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 not that far back. Like the other right there, right there. Yeah, yeah.
Okay.
Yeah.
Okay.
Okay, I go there and then go to the all-time high that we hit.
Yeah. Uh-huh.
So
Yeah.
that's what I start with, and then after that, I'm kind of done with the daily for the most part, and I go to the 4 hour.
Okay. So first, I already got to say you should absolutely be grabbing some more levels off the daily, in my opinion.
Really?
Oh yeah.
When I
It-
trade, I scalp. I don't do any swings or anything. You think
yeah,
I
me
should still?
too. 100%
Okay,
of the time. I scalp off daily levels because daily levels are where you get massive moves, you know? That's
gotcha.
where big moves come from, is from daily levels. So yeah, yeah. But okay, so 4 hour. Now we're on the 4 hour.
Right. And then
What
now
we
I just
trading?
like look for key levels. So anywhere where you see like a key bounce or like the top and bottom of a range on the 4 hour, just like start throwing lines up.
So like
And then usually like have the fib levels in blue and then like the key levels in red, just so I can tell the difference between like a daily fib and like a key level. But it doesn't matter for the sake of this example, you know what I mean?
I'll change them all.
And then
Yeah, so
these
major
are
highs, major lows, same things I recommend, double tops, double bottoms.
yep.
You're just getting them on the 4 hour. Yep,
And
got
then
it.
anything like it just and then anything that like we see major moves off of where like we touch and then
Yeah,
major
like here we
yep.
go, double bottom,
Right.
river. Yep,
Exactly.
got it. Yep.
Right, and then normally those levels that I got from the daily and then the 4 hour, I would keep up there for like an extended period of time until I think like a new trend has started, so I should redo my fibs. But those for the most part are like I don't want to say permanent. They're never permanent, but like semi-permanent. Like I might keep them up for like a month straight before I redo them.
Yeah, I
And
mean
then
my daily levels don't lead the chart, you know.
word.
They're just what I trade always. I mean, just to show, you know, for anybody who's still listening, just to show why. So back here, you know, we were trading these levels, and yeah, we took that big old sell in 2020. Well, when we came back to this area, you better believe that these levels were the levels that I was trading and were mattering, you know? And so levels off the daily last virtually forever. You know, these were levels from the very, very end of 2021 that then began working in the very, very beginning of 2023. So they last years as long as they're good, strong levels. You know, 4 hours a little bit less. They're really the only difference in the levels you're finding in the 4 hour charts from a daily chart is that you're taking in the pre-market movement into account. So I like to take note of gaps. I, of course, will look at the 4 hour if I need some levels for where we are. But overall, this is great. Yeah, pull some fibs, slap some important levels on there from the 4 hour, and you're off to the races.
All right. So then that's like the second step of like so it's a 4-step thing, I guess.
Okay.
First step was that daily fibs, then the second step was the 4 hour key levels. And then from there I go on to the 5 minute. And this is where I'll chart my just pre-market high, pre-market
Uh-huh.
low, yesterday high, yesterday low.
Yeah. Uh-huh. Great.
Yep. And then I like have them labeled so that it says like I don't confuse them with my actual key level. This says like this is pre-market high, pre-market low, yesterday
Yep.
high, yesterday low. And
Yep.
then at this point, that's usually the point I'm at where I'm starting to trade, right? Like now it's 9:30, the bell dings. Those are the levels I have on my screen.
Uh-huh.
My goal is usually to take a play off of the key levels, which are the 4 hour resistance and or 4 hour levels and the daily fibs. But potentially the pre-market highs and lows. And then after that, about at 11, once the opening range has been set, and I do use your indicator for the opening range. I found that it works pretty
Nice.
well.
Yeah,
Thank
that's
you
great.
for
Yep.
that.
Cool blue
That's when
lines.
I'll start doing like Flips's fib intraday method, but normally I never take plays off of those fib levels because there's so much data you can get in there's only so much data you can get in 2 hours. So those levels aren't necessarily the strongest that you'd want to bet your
Yeah.
entire trade off of. But I'll
Yep.
use those as like, all right, I should probably be trimming, if that makes sense, right? Like I'll use those as like
Exactly.
I'll
And
take
that's
the play
yep,
off of a
I
key
love that.
level, have my fibs level set, and be like, all right, I'm at 25% profits, and we're at a fib level, 50% retracement. This is a trim. Like this, I should be trimming, and then use those to monitor my position rather than and that's the fourth step, those intraday fib levels, but use those to monitor my position,
Yeah,
and then
I mean that's perfect. And I think that is the best use for those fibs like you're talking. I even for me, pre-market highs and lows, they're almost never an entry for me. They're almost always a target. Same as yesterday lows, yesterday highs. Like if I'm long, I'm not entering on a break of yesterday's highs. I'm trying to be long into yesterday's highs and be exiting there. That's how I treat those. And same as, you know, I think I might have been you that I even told about, you know, using a fib extension off of the opening range. It's good for targets, not entries. I think people have been in recent times putting a bit more weight on intraday fibs than they should,
they
you
have.
know,
I've
and
really
kind of using it as a crutch to just not find levels. You know, you can, like I stated, if your levels are good, you will almost always have a fib lineup. And so that was one, you know, these are, I think you probably saw these. These were these ones that we did in Mastermind, you know, on this very first Sunday. I think we did it here or something. Yeah, we did it here.
I was there for that.
And so these were the levels and I've done some updates. We've updated them, you know, we updated them a couple weeks later for the areas that we were trading in. But these were the levels that we marked in Mastermind, and we marked all of these levels, then pulled our fibs on this retrace. And as you can see, they lined up where we had a bunch of resistance and supports. That's where we consolidated. So that's what I did, trading these levels, trading these daily levels, you know, for the last month. Every single trade I've taken has been off of these daily levels. And basically how I treat it is if we, you know, if we break above one, I look to long it, you know, same as here. Break below, I'll short it. And I'm targeting the next one. If we break below the next one, short that bounce and target the next one. Break below it, short that bounce, target the next one. And so, you know, all of these levels are from the daily, all from, you know, months ago. Well, you know, basically July. And just trade the levels that are on your chart, use them as targets, and then use them for your bias. You know, what I tell people is if I have something like this, where I got two levels within, you know, a buck, or sometimes they're even closer, you know, here's one that's, I guess that's about the same. But when I see this, I think of that as strong. When I just have one down here, you know, I mean, it is 550. It's a big psychological level. When I just have one, I think of that as, you know, important. This one ended up needing that 550 line also. Important, but less important than something like this, where I'm like 20 cents apart. You couldn't pay me to be short going into this level because I expect that bounce, you know? Same as these ones, you know, when we break below, you short it, but when I'm down here, I'm thinking we bounce because I trust my levels. If we buy back up to it, I assume we reject it because I trust my levels. And it's because they're from the daily, and it's because they work just over and over and over again. But what you're doing is basically the same thing I do. I make much less use of fibs. Obviously, we've had a pretty parabolic move, so fibs are handy for it. But I just trade those daily levels and I scalp off those daily levels, and I have no interest when we're in no man's land, but I have interest when we're at the levels because that's where we get provided big moves, you know? And so even this one off the open, you know, I didn't get to short it because we were too far away from it, but you can see our levels worked very well. I mean, these, like I said, we charted these on the 5th of August. So the levels work very well. Then you get the breakdown. We just didn't get the retest. I would have happily shorted this thing on the first bounce up to there, no questions asked, you know, but we sold off into the open and I didn't get that opportunity, unfortunately. But what you're doing sounds perfect. I wouldn't add anything. I mean, as I said, you know, I like the daily. I think one thing that I didn't hear you mention is these daily SMAs. You should absolutely have those on there because they just do such a good job at telling you how big money is doing overall in the market right now. And so, you know, I
Wait, sorry,
highly
the
recommend the
SMAs?
SMAs. But other than that, you're good. You know, I mean, everything you said is good. It's just like I teach in all my classes, you know, for months now.
So I usually use like EMAs in general. Do you use the SMAs for everything or just like on the daily?
Daily time frame is really where I focus on SMAs. And then there's some really, I mean, an EMA combo that I used to always use on short time frames, but use on longer time frames because I found out. I mean, I thought I was the only person who used it, but Tilio uses it. The 513 EMA on the daily is ridiculous. But then my long term or my like longer time frame EMA combo, my favorite one is the 13 and the 34. You aren't gonna catch, like, it's not gonna pick up the flips early, you know, or the crosses early, but when it crosses, it tends to give you a pretty epic move. You know, it doesn't cross a lot, but sometimes you'll get caught in a little bit of chop. But as all you know, all EMAs are useless when you're sideways, you know. But when you catch the breaks, it's typically worth, you know, taking note of these sorts of crosses because they will work over and over again. So for long time frame EMAs, the 1334 is my personal go-to, really. But then short time frames, I use the 5 and 13 and 9, 20, 50, just like everybody else, you know. I mean, nobody uses the 513, but I love it on short time frames as well. But it's important to note that on, you know, any sort of ranging day, EMAs get to be useless and they can be stuffed with fake outs, especially on something like, let me find a nice rangy day, especially on something like the 5 and 13 that the crosses, it picks them up quick. So you can start to have like, oh, cross, but maybe you made a couple bucks, cross, doubt you made anything, cross, doubt you made anything, cross, doubt you made anything. So it's best for when you get a nice early morning cross and you get to ride that first little pump up or pump down or, sell down, whatever it might be. But daily time frame, those SMAs, everybody watches them. I mean, from retail to, I mean, not the biggest of the big money because they literally are the data that makes them, but everybody really does watch those SMAs.
So
But other than that, everything you're doing is perfect.
thank you. I'm glad to hear. I just kind of want to double check that. I respect your opinion a lot.
Right on, man. I appreciate that. Thank you.
What was I gonna say? Okay, do you get most of like that information that you're talking about from OOT? Because I don't feel like I've heard it in other places in OOT. Or do you like usually you do your own research on YouTube and stuff in reference to like the SMAs and then like you put me on to another one too. I think it was the Daily 200, and you're like, if you're ever down there, you should be buying, no questions asked.
Oh yeah,
Unless
the
like
daily 200's huge. Hourly 20, that's my thing. That
the
one,
hourly 20, yeah, I added
yeah, a
that
lot
too.
of people are
But
using that. But no, honestly, man, just time. And I don't trust YouTube. There's like three people that I think are worth listening to in the trading world outside of like Tilio. And so I think YouTube's overall a pretty rough place. But I've just traded for a while, so I know the things that I like. If I am going to read it, my nice rule of thumb is if they weren't trading before 2008, don't listen to them. You know,
really,
yeah, yeah, because we're so stuffed with gurus, you got your like ICT people and stuff these days, and like everybody is listening to non-profitable traders and taking their advice from them. And to me, it's like you had to find somebody who is better than you that can prove it to you and has proven it to you time and time again, and then take advice from them. Or, I mean, find those people that I talk about, like Al Brooks, your Linda Rashkes, those kinds of people that are like, they've traded for 45 years and made a career out of it. That is someone that's worth listening to. Some dude who started trading in 2017 because of massive deregulation on big businesses and just blindly bought calls anytime an EMA was touched, and made money. Those types of people just aren't worth listening to. The only way to get really good in the market is time in the market. And so many of these people on YouTube, they aren't profitable and they don't have enough time in the market to actually take advice from. So just be very, very selective on who you choose to learn from. And to the best of your ability, like verify that they are actually a good trader. Like, I mean, we're so lucky in OOT, like whether you love or hate how analysts trade in here or whatever it is, me or other people, you see us posting trades every single day, trade ideas, charts. You get to see, even if you aren't seeing the contracts we're buying, even if you aren't seeing like and I try to post screenshots just, to be open. But even if you aren't seeing it, you can learn and say, okay, their trades normally work. Like, you spend enough time in OOT and you see the people who are hitting big trades, frequently, or hitting trades frequently, are right more often than they're wrong, are taking good entries or taking bad entries. You very quickly learn the people in here, like what their risk tolerance is compared to you. And so we're lucky in OOT that you can decide, just based on past experiences, if these people are worth listening to. The average dude on YouTube is just going to post a picture of like some paper trade that he hit it huge on and then try to explain why you should listen to him. And so for me, I just recommend avoiding that like the plague if you can. You want verifiable people, folks like Tilio, hopefully
on that
me.
same note, do you know the YouTuber Carmine Rosado?
Yeah, one of the few worth listening to. And
Really?
I have a very strict rule in regards to YouTube videos. If it looks like clickbait, I will not watch it. That
Mm.
person, like, if they have to do that to get people to watch their videos, they aren't worth watching. Like, look at an Al Brooks video. It's his old dumbass smiling back at you, and that's the picture. Like, nobody's gonna click on that, and that's the guy that I want to learn from. However, that guy, he is amazing at supply and demand. He is one of the best traders, or especially of like the new day and age traders. His risk reward and what he teaches in regards to risk reward is absolutely phenomenal. I mean, the dude has a bad win rate. His win rate's 45%. And he
Right.
puts up 100K months.
That's exactly what I was gonna ask you, like in regards to that. So with
Like, I don't think that's something
Carmine,
to aspire to. Like,
right.
that is a really bad win rate. But he is so technical and cut and dry in his trading. No FOMO, no tilt, none of that. He says, I'm taking this trade because my system tells me to take this trade, and either I make money or I stop out. But you see it. Sometimes, he might lose 1 or 2 grand, but he's a futures trader. So the numbers are bigger than people realize. His red days will be $1,000, $2,000. His green days will be 15, 16,000. And it's
But
not
that's exactly what I
YOLO.
was gonna mention
It's
to you.
just excellent risk reward.
That's exactly what I was gonna mention with you. I was like, so like looking at Carmine Rosado, he posts all his bank statements, and at the end of every month, he always shows all his profits for the
Yeah.
day. And he, in contrast to what a lot of OOP pushes, which neither is wrong or right, but he emphasizes on these one, two, tops $3,000 losses, and every win he gets is like 15 to 20K. So my
Yeah.
biggest thing, but his win rates are usually between 45 and 50%. So my biggest thing is, do you think it's better, at least for a beginner trader going into it, to emphasize a higher win rate, or to emphasize a decent win rate, but
I mean, I
much
think as
larger profit
I think
margin?
as a trader, I don't want to say it's a goal, but like high win rate is crucial in my opinion, because
Okay.
you have to your risk reward either has to be phenomenal, or you have to be somewhat lucky to have that low of a win rate and still be making money. And most people don't they don't have the like robot like trading ability that he does to just stop out of the trade. Like, he's wrong, he stops out. And he's in futures, so it matters. And he trades large positions. Like, when he loses, 2 grand on a trade, it's because SPY moved 30 cents against him. That's 3 points. You got a 10 lot on there. That's a $1,500 loss when SPY moves 30 cents against you. So he runs an extremely tight stop loss on his trades. And most people they won't. They refuse. People refuse to use stop losses, no matter how much we beg them to use stop losses. And so I think as a trader, what people should focus on is, not so much number of trades, not so much win rate, not so much any of that. You want to find yourself, 3, 4, 5 really good trades a week and take them. Right or wrong, if you sit and you wait for one, perfect, it's never going to be perfect, but the best trade that you can sit and wait for, and you only take those trades, you don't look for the little quick scalp bounces, you don't look for any of that. You look for selling to extreme or buying to extremely major points on the market, and you take the short or you take the long, and you wait for those trades to come to you. And so if that's what you do, part of that will give you a very good risk reward, because you're trading at a place where the market will make a big move, but your stop will be tight. And so that's what he does. And, that's why he trades supply and demand. And, well, he's really moving on to mostly like volume stuff, footprint charts and book maps and all of that. But that's what most future traders, that's what they evolve to when they're good. Like, you get much more into the volume side of things and follow the volume around the market. And so that's what he's getting into, but he uses it coupled with the supply and demand. So he takes, very few trades a week, but makes very nice money because he waits for the perfect setup, and he knows, hey, if I stop out, I'm going to take a decent lot, or I'm going to lose a couple of grand. If this hits, it's going to hit big. And so that's what he does. His trades are good. He doesn't scale out. When target is met, he takes the money. And then he watches the volume in the market. He sees if there's any reason that he should exit the trade early, but and then he doesn't let green go red, which that kills people. And he's just like me and Tilio, and they're like good traders, flips, tight stop loss. I mean, if like your favorite analyst trades go minus 60, 70% every single time before they show profit, that's not like they need work on entry. So look for people who trade like you want to trade and trade like them. And if you just want to YOLO and you want to hold trades till minus 70%, pray they come back, and you know that's what you want to do, then more power to you. You won't last, but more power to you. But find those people who trade like you want to trade and listen to them, you know? That's why I'm different. I've traded longer than most people, and I was lucky to find Tilio. Tilio is somebody that, he trades better than I do. So that's somebody that I can go to and ask questions. You guys in here, especially some of the newer traders, there's tons of us. There's 30 people in here that are worth asking questions of. So, learn from somebody who trades like you wish you traded and just stick with it, Okay, but with that, we've run a little long. It's dinner time for me. I got to call it here.
Appreciate you. Thank you.
Yeah, of course. But thank you everybody for coming. Nice little turnout, Tuesday night market scan. Thank you all so much. And we will call it here and talk to you all tomorrow. Thank you. Yeah, thank you everybody. I appreciate it.